Hello and welcome. I'm Philip Alexander, Senior Editor of the Banker magazine. We're at the end of the IMF World Bank Annual Meetings 2014 here in Washington. And I'm with James King, our Middle East and Islamic Finance Editor, to talk a little bit about what's been happening at the meetings and the mood here generally. What's been the view regarding the situation in emerging markets? What have you been hearing about people's expectations for the prospects for banks and finance in those countries?
Well, I think the general sort of consensus is that things are going to be a little bit slower over the next couple of years. I think there's concern about, obviously, China sort of rebalancing the economy. There's obviously a reduction in commodity prices and sort of weaker global demand more generally. So for emerging markets, the picture's a little bit more depressed, perhaps, than it was maybe a few years ago. And I think people are sort of starting to wake up to perhaps the new reality that might, the new reality for the world economy, basically. But in terms of your conversations and discussions around sort of financial regulation moving forward, what have you heard here at the meetings this year?
Well, I guess the regulators themselves, especially Mark Carney from the Financial Stability Board, are essentially saying they're nearing the end of the agenda that they had for post-crisis banking reform. So banks have more capital. They're devising a system to ensure that large, complex cross-border banks can be resolved in a crisis situation. So the focus is really what are the risks we need to look at in the future, and the big one is around what's known as shadow banking. That's a very broad term, but it basically means things like the asset management industry. And a particular concern that's been repeated a lot is about liquidity risk. Obviously, if a fund has daily redemptions, they can pay their investors cannot be asked to be repaid every day, but they're invested in long-term assets or assets that are less liquid, high-yield bonds or whatever. There's a potential for a problem there to emerge. And obviously that's a particular concern because the other thing that everybody's talking about is the expectation that next year we're going to see interest rates start to rise in the US, so this incredibly plentiful liquidity that we've been used to for several years is gradually going to get tighter. So it's the concerns about what are the knock-on implications going to be, which also touches on emerging markets as well. You also had a chance to speak with some officials regarding sort of the situation in sort of Russia and Eastern Europe at the moment. What's sort of the outlook for those two regions? Well, obviously you mentioned concerns of slightly more somber tone. It's some of those geopolitical concerns that are driving that as well. In the case of Russia, Ukraine, there is a deep concern that for both countries it's a very difficult time. Financing for Russia is extremely difficult because of the sanctions that have been imposed. Russian companies are trying to turn towards Asia, but it's not clear that Asian banks have much appetite to lend into Russia. For now, we heard Sergei Guriev, who's a professor and a former advisor to Sberbank, the country's largest bank. His view was that Russia is not any imminent crisis. They have several $100 billion in foreign exchange reserves. But clearly, companies are not going to be investing, they're just going to be hoarding cash, and that's going to slow the economy down. In terms of Ukraine, the feeling in the international donor community is very much they're determined to try and lend into the country to help it rebuild. There's a lot of reform that needs to happen, fighting corruption, but they want to try and get the country back on its feet because they think that's going to be crucial for ultimately helping the conflict to recede as well.
Okay, great. I think the one bit of good news I've heard so far from the meetings this year actually is on my own beat, which is Islamic finance. That has actually been sort of exceeding expectations this year in terms of bond issuances, Sukuk, and also in terms of the sort of impressive growth of Islamic banking as well. I think most sort of the consensus view is that it's going to continue to grow in 2015, and we can expect to see perhaps even a record level of Sukuk issuance perhaps next year. So this could be an exciting time, and this is the one sort of standout positive feature that I've certainly experienced and felt here at the meetings this year.
I mean, the other sort of positive aspect, obviously there is a focus on growth globally, and what we're seeing now is a lot of the development institutions with the World Bank coordinating, really looking at how to get finance, in particular to small and medium-sized enterprises that are the backbone of so many economies, to generate jobs. So it's going to take some time to work that out, but the thinking has started, and obviously that's going to be an important theme going forward.
Okay, thank you very much, Phil.
Well, thank you for that, James. So clearly some concerns about the global economy, but also some hopes and some plans going forward, and we'll see how everything evolves when we meet for the next IMF and World Bank annual meetings in Lima in Peru in 2015.